today, as we're recording this on December 10th of 2018, and it's the time of New Year's resolution and getting ready for the end of the year and whatnot. And so as a result, I wanted to do maybe a little bit of a different video here today and talk about some things that you might want to think about doing when it comes to your money between now and the end of the year on December 31st. Specifically, we're going to run through 10 things that I think should be on your end of year financial checklist, if you will. And at the very end, we're going to talk about one thing that really shouldn't be on your end of year financial checklist as well. So with that, why don't we go ahead and dive in to our list of 10 things. The first, several of which have to do with taxes, right? December 31st is not just the end of the year, but it's the end of the tax period that you're going to go and pay taxes on in mid-April as well. And so as a result, right, this is the time of year to make some moves to reduce your taxable income, if you will, so that you end up owing less in taxes when it comes time to pay them on April 15th of next year. So the first few items on our checklist are going to deal a little bit with that. And specifically because we have been talking about these things around this time of year, our first two are going to be ones we talked about in a little bit more detail over the past 2 weeks. Step number one, if you have investments in a brokerage account or in a non-retirement investment account, if you will, you want to take a look at your statements to see if there are any tax loss harvesting opportunities for you this year. Particularly in a stock market year like this year, where the market's been down quite a bit over the past few months. At least it's been relatively flat for the year as a whole, but particularly when there's big losses in the markets in the last few months of the year, you want to take a look to see if there's any way that you can sell off some of those losses to offset some of the other investment income or even just your taxable income overall, and then reinvest that money that you sell into different investment vehicles. We talked at length about how to do this last week, so I don't want to rehash it too much. And again, as I mentioned last week when we covered it, this is a pretty complicated process. It is one that if you're going to pursue it, I do recommend that you seek professional help to help do this tax loss harvesting. But that absolutely is step one, right? Between now and the end of the year on December 31st, you want to take a look at your investment account, see if you have any funds that are down for the year, to sell those off to offset some of your income to decrease the amount you're going to owe in taxes overall. So that's step one, tax loss harvesting. Step two is another one we've talked a little bit about recently, and that is you have until the end of the year to make your retirement account contributions for tax year 2018. First place I'd start with this is with your 401k or similar account that you have at work, right? Any sort of employer-sponsored retirement plan will do. Contribution limits in 2018 are $18,500 for 2018. That goes up to $19,000 in 2019. You have until December 31st to contribute that full amount if you want to. If you have some extra money on the sides, if you want to reduce your taxable income this year and put money away for retirement, highly recommend you do that. Right now, as you know, if you have a 401k or any of these other types of accounts, your money, it comes out of your paycheck. Typically, you specify either a certain percentage of your salary to contribute to your retirement account, or even just a fixed dollar amount every paycheck. But you're not limited to funding those accounts in those ways. You can actually just make a lump sum contribution. You want to reach out to your HR rep to see how you can do that, right? They'll be able to tell you how to do it based on the way your particular plan is structured. And they should be able to tell you how much you can contribute based on how much you've already put in for this year in that $18,500 contribution limit for 2018, right? If you have money that you are looking to save and invest when we get started on some New Year's resolutions, right, you have until the end of the year to max out your 401k. And likewise, traditional and Roth IRAs work the same way, right? You have until, technically it's not even the end of the year for traditional and Roth IRAs. You have a little bit longer than that to make your annual contributions, but this is the time of year I would start thinking about that. You can contribute up to $5,500 for 2018. And as I alluded to, the good news here is that you actually don't need to make them by December 31st. You have until when you file your taxes on April 15th to make those contributions for 2018. Bringing it up now, because again, it's a good time to start thinking about it, and you might want to decide whether or not you should put that extra money into a 401k or into an IRA. Make those decisions now. If you want to go the 401k route, you have to do it by December 31st. If you want to put money into an IRA, you have a little bit more time and flexibility with that, which is good. But that's step number two on our list, right? Is make additional retirement contributions if you'd like to, so that you can stay under the maximum for 2018, or go all the way up to the maximum if you'd like to for 2018. Step 3, review your tax withholding, right? This is what you typically file on a W-4 form when you start a new job that specifies how much money is going to be taken out of your paycheck each and every month. Now's a good time to take a look at that, right? Because as you may remember, if you're watching this in 2018, about a year ago, Congress passed a brand new tax legislation overhaul called the Tax Cuts and Jobs Act. And well, a lot of the press is really focused on how much more corporate taxes were cut than taxes for individuals. The fact remains is that almost everybody is going to get a tax cut for 2018, which is good news overall, certainly for you. But if you haven't taken a look at your tax withholdings and either your tax bracket has fallen, your actual tax rate has fallen, or the way the tax bracket shifted with your income may have caused even you to save on taxes even more based on the way that they changed the brackets around. You want to double check how much is being withheld, because my suspicion and what I'm expecting this year is that people might even have a good amount of money withheld this year. More than they typically do compared to how much they owe in taxes, get a bigger refund when it comes time to file your taxes in April. Now, a lot of people like getting tax refunds, so you might not mind that, but personally, I'd rather you have that extra money all year long rather than let the IRS keep it interest-free for up to a full year. So now is a good time to review how much is being withheld from your paycheck to see if either based on your family situation you should be making updates, or if there's a way to decrease that withholding just a little bit to keep more money in your paycheck on a week-to-week, month-to-month basis. Certainly, I mean, if you want to wait until you see what your tax bill is like this year, that might be a good idea too. But I'd at least giving it some thought right now. So that's item number 3, right? Review your tax withholding and make changes as needed. And finally, as far as the kind of tax section of this list, number 4 is one that I am particularly passionate about because I have a lot of conversations about this later on down the line. Make sure that you know what tax forms you're expecting this year, and even make a list of them right now, because you certainly need all of this information before you go to start filing your taxes. And I'm finding that as people kind of advance in their career and different life events happen, right, this becomes more complicated over time. And so you don't want to be in a position where you're reaching out to a tax preparer or starting to file taxes on your own, and you don't have all the information, right? I was there, I did it myself in the first few years of my career. It's not very fun, right? You want to just do it once and finish it. So make sure you have all those tax forms. Now, it's going to vary very much depending on your individual situation. But common ones, certainly if you have any sort of job, you want to you make sure you have a W-2 for that job. If you have multiple jobs, you'll get a W-2 form from every employer. Details your income for the year, how much has been withheld in taxes, and various things like that. That at a most basic level, you want that. If you work as an independent contractor, or if you have some sort of side hustle that you do on your own and you're not technically an employee for it, you're gonna need to get a 1099 form for that job as a way to report that extra income. So make sure you have that. If you're self-employed, like I am, you got to issue it for yourself. But you do want to make sure that you have that form ready for when you go to file your taxes. If you have student loans and you're making student loan payments, you want to make sure you have a 1098-E form, right? The student loan deduction, you can deduct up to $2,500 from your taxable income every year. It's an above the line deduction, which is a complicated way of saying it's a very good deduction to take. We'll keep it simple. So you want to make sure you have that form 1098-E form so that you can deduct the interest you're paying on student loans each and every year. If you have savings accounts, and particularly as high yield savings accounts are now paying 2% a year, which is not a lot in the grand scheme of things, but it's a way more than they used to. You want to make sure you're getting 1099 INT forms from those savings accounts. Right? You may not have needed that or have gotten one in years past, particularly because interest rates were so low. There typically is a threshold that banks need to meet in interest that they pay out before they give you those forms. But you do want to make sure that you look for those forms in your emails from your bank this year. Same thing with your taxable investment accounts, 1099 DIV forms. You want to make sure that you'll get as well. That's going to report all the investment income you have. And when we talk about tax loss harvesting, the goal is to reduce the amount of taxable income you have on that form. But you definitely want to make sure you have it. And finally, 1095 forms for health insurance, right? Depending on where you get your insurance from, it may be form A, B, or C, but you do need to make sure you have that. this year. The big headline at the end of 2017 with the passage of the tax reform legislation is that the individual mandate has been repealed. And so you don't need to pay taxes if you don't have health insurance anymore, which is technically not true. It's a pet peeve of mine. They didn't repeal the individual mandate. They set the tax penalty to 0, just as for the record. But more importantly, for the sake of this conversation, that starts in tax year 2019. You do need to have health insurance this year, or you will be forced to pay what the old penalty was for under the individual mandate. So you do need to make sure you have a Form 1095 that verifies that you were covered for at least 9 months of the year to avoid that penalty. Question came in: do you only get a 1099 if your income is above $600 for that specific company? Yes, I should say typically anyway, right? Companies are typically not required to issue you a Form 1099 unless you get paid a certain amount of money from that job each year. I want it because I have to issue a few of these myself. I believe the threshold is around $500, but I would have to double check. That may have changed since last tax year. But yeah, you might not always get those forms if you were only paid a little bit. You still need to report that taxable income. But yeah, that's a great question. You probably won't get a form if you only made a few $100s. Ultimately, you can reach out to the employer that paid you to verify that. Now that's a great question. But that's item number 4. Long story short, right? Make sure make a list of the tax forms you need so that you can track as they come in, so you know when you're ready to file. Number 5. All right, we're shifting from taxes a little bit. If under the health, we just talked a little bit about health insurance. If your health insurance plan comes with a flexible spending account or an FSA, you want to try to use that money by the end of the year. FSAs are different than HSAs in that the money you put into an FSA typically doesn't carry over from year to year, right? So if you have large prescriptions, contact lenses, something like that you have been waiting to fill off, or get a new pair of glasses, anything like that you can kind of make those bigger expenses between now and the end of the year. Now's a good time to do it. Now, I should say that technically, we typically talk about FSAs like the money just goes away at the end of every year. Technically, most FSA providers will offer one of 2 options. It's a nicer way to get around that, if you will. Either you can carry over $500 year to year, or you have a few extra months to actually use up all the money, right? You have until March 15th rather than December 31st. Varies depending on FSA to FSA, which of those 2 options you'll have, right? Either you can carry $500 year to year, or you have a few extra months beyond December to use up the money. Ask your HR department, ask your FSA provider. If you haven't heard anything about that, I would argue you probably should have. But now's the time to ask that, so you can plan your kind of spending strategies between now and when the money gets used up accordingly. That's number 5, right? If you have an FSA, try to use the money before the end of the year, or carry $500 over and/or use it by March 15th, depending on what your plan offers. Number 6 is actually one of my favorites, and it doesn't necessarily have to be done this time of year. I would argue it probably should be done every few months. But if you've never done this before, now I would encourage you to take the time now to do it. And that is, go back through your work history over the past 12 months and document the things that you've gotten done. Right? Go back through your emails, your calendars, the folders on your work computer, right? What have you been working on over the past year? And where have you gone above and beyond, right? What have you brought to your company? What have you brought to your employer that the average employee might not have, right? You want to document all those things, because I find that a theme in these later items is that you tend to forget all the stuff that you've gotten done over the course of the year. And particularly with something like your work and accomplishments and things like that. That's really good information to have when it comes time to go up for promotion, to ask for a raise, things like that. I do a lot of salary negotiations with people, and I find that these conversations go a lot better when you have concrete documentation and good records of the great stuff you've done for them, right? And I'm not just talking about your typical day-to-day job responsibility, but things that would stand out, right? You want to make a record of that. Again, I encourage you to do that on every month or 2, right? To just kind of go through while things are fresh. But right now, at the end of the year, if you've never done that, great time to do it, right? Number 6, document your accomplishments at work, right? And have a Google Doc that's running always that details all those things. Number 7, pretty simple one, check your credit reports. You're eligible to get 1 free credit report every year from all 3 of the 3 major credit bureaus: TransUnion, Equifax, and Experian. And you should be doing that every year. And now is as good a time as any to make December your time to check your credit reports. Getting your credit score from a site like Credit Karma or something like that is fine, and that's a good thing to track going forward. But I would argue it's more important to actually pull the full PDF, right? They can be really, really long, and actually review page by page to make sure there's no accounts in there that aren't yours or shouldn't be there, to make sure that nothing has been incorrectly added to your credit report this year. I have somebody who had an incorrect medical expense get added to their credit report that wasn't theirs, never should have been there. It was an error on the credit, I think it was, I don't remember which of the 3 credit bureaus it was, but one of them messed up and had something on there that shouldn't be. They reached out, they got it taken care of. Make sure that nothing has gone to collections. You haven't missed a bill, right? That actually is yours to pay, right? Take this time, go through your credit reports. It only takes a few minutes, but you'll, particularly if you're getting ready to take out a mortgage or something like that, you'll be happy you did that. Number 7, check your credit reports. Number 8 is kind of getting back to the theme of December, if you will, right? Take note of what you're spending on the holidays and build that amount into your monthly budget starting next year. Now, right, if you know anything about me, you know I'm a Christmas fanatic, right? I love this time of year. I'm not suggesting that you focus on cutting your holiday spending this year. That's not what I'm saying at all. But you want to take note of it and note how much you're spending so that you can plan ahead for that next year, right? In fact, if you find that you spend $600 on Christmas gifts or holiday gifts this year for people, right? If you average that out over 12 months, that's $50 a month. And one of the things that we're doing in the new Paysetter Planning Personal Savings Program is opening up separate storage accounts for expenses like that happen frequently, but not every month, right? So that, the things that you can plan ahead for, even if you're not spending on a month-to-month basis, set aside that $50 a month, right? Set up automatic transfers. By the time you hit December next year, you'll have $600 in the bank ready to go for your gift spending next year. Now, again, right, you want to start that in January. I don't recommend you start that now. There's like I said, we're just rolling out this new savings program with a few folks now. We're not starting the budgeting component at all until January, right? This is not the time of year to be doing that, but do keep track of it. Do plan ahead for it so that, starting in January, you can be in better shape to be prepared for those sorts of expenses next year. So again, number 8, take note of what you're spending for the holidays. Don't do anything about it now per se, but build it into your budget next year so that you have money set aside to cover those expenses. Step number 9 is an interesting one, and I've never actually explicitly recommended this to people, but over the past few client meetings I've had with folks, we've actually taken some time to take a step back and review how far people have come over the past 12 months, right? How much have you been able to save, right? How much bigger is your bank account now than it was 12 months ago? If you have student loans, what's your student loan balance compared to when it was compared to what it was 12 months ago, right? How much have you actually accomplished financially this year? Because the overwhelming theme of these conversations I've been having is a lot more than you might realize if you actually take a step back to look at where you were 12 months ago. How far did you come? What did you accomplish? What were your goals? Did you reach them? If it hasn't been a great year for you, what didn't go as well as you hoped? What could you do better next year? But I think that the end of the year right now is a really good time to do that, and you really might be surprised to find what you find if you actually take a look back at where you were 12 months ago. If you do a lot of investing, right, the markets have been down the past few months. That might be a little bit of a discouraging review this year anyway. Although it's important, you should be doing it. But again, right, take a look at the major financial issues, concerns that you have, and see how you did this year on them. You might be surprised. So that's my number 9 thing, is right, actually review your savings, your debt level right now compared to where it was 12 months ago, and just see what happened. And finally, number 10 is a little bit related to that. Start thinking about what you want to accomplish in 2019 when it comes to your money or your life that you'll use your money to finance, right? I'm not big into New Year's resolutions at all. I don't like them a lot. We'll probably talk either the Monday before New Year's or the Monday after New Year's about why that is. But I do think that in terms of planning, right now is a good time as we're talking about all these specific strategies to use to wrap up 2018, to take a look at 2019 and to see what it is you want to work toward and how you're going to get there. Be happy to set up a free consultation to talk through what that might look like. Head to paysetterplanning.com/contact. to take a look at that. And again, we would be happy to talk a little bit more. But that's number 10, right? Start thinking about what you want to do in 2019. Don't set it up as a New Year's resolution. We'll talk about how to set it up instead. But now's the time to really start thinking that through. So that's it, right? Those are the 10 things that I would recommend are on your end of year money checklist. Now, I did promise one that really shouldn't be there, and that is this. And shouldn't be there is definitely the wrong way to frame this. But a few conversations I've had over the past few weeks have gone something like this. Someone comes to me and say, Bill, we've had a good financial year. We're trying to get stuff ready for the end of the year. We want to do some charitable giving, right? And what do we need to do from a tax perspective to maximize the value of what we're giving away when it comes to our taxes? Now, to be clear, I'm not telling you not to give to charity. I think that's a great thing to do. This time of year is certainly no exception. But for the vast majority of people out there, there's no tax reason to do so this year. Unless you're talking about giving away tens of thousands of dollars, it really shouldn't be a part of the picture for you this year, right? For the vast majority of people. One of the mechanics of the new tax law that is kicking in 2018 makes it a lot harder to take advantage of that, right? The good news is you get a double the size of a standard deduction that you've gotten before, which means that it's much harder to make itemizing your deductions to reduce your income worth it. Again, giving to charity is completely fine. It's good, have at it, right? But from a tax perspective, it really doesn't make sense this year, right? Or at least it doesn't make sense to try to reduce your taxes through charitable giving, at least until we're starting to talk about giving away tens of thousands of dollars, in which case certainly we can talk about that as well. But anyway, right, I hope this is helpful in terms of some things to think through between now and the end of the year. You have a list of 10 things. I'd encourage you to start with one or two, right? Don't try to do them all at once. There's no need to do that. But particularly on the early ones we started talking about from a tax perspective, pick one or two to sit down and try out. And honestly, shoot me a message, shoot me an email, let me know how it goes for you. Again, this is Bill Nelson with Pacesetter Planning. Thanks so much. We're here every Monday night, and have a good night.